Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we had something planned. We were going to call it No Donation Friday because I didn't think there was a whole lot going on. Well, there's a lot going on. We've got a big-time market crash on our hands, really something developing after a PPI number, but that's not the reason why the markets are coming off. The markets are coming off by fears that Iran is going to be hit by the United States this weekend. I'll show you the odds on Polymarket. These things have spiked in the last 12 hours. We're starting to get reports from all over, all different media sources that an attack on Iran really is imminent, and they're looking towards maybe Saturday night or Monday night. I don't really know if that's going to happen. I don't know if it's all true, but I do know price action in the markets. When we start talking about really big, epic sell-offs, this is a pretty good one. I mean, this really is a pretty good one. We just take a quick look at the Dow Jones Industrial Average. We're off big today, or excuse me, we're off big this week, about 1.5%. But that S&P 500, take a look at this US 500, sort of a real choppy week. Not really a whole heck of a lot going on, but take a look at today. Just today, you're starting to break. And what I would really point out, I've been talking a lot about the average average daily range and the ADR and what is volatility. Well, I mean, business has picked up. You can see we had all sorts of dojis in here, real tight ranges, and then you had a couple of really big ranges, and now we've started to trade beneath yesterday's low. And a majority of this bearish price action from the 26th of February to the 27th of February, that is all predicated upon fears over a fresh war with Iran. It's starting to really change. Now, the headlines are going to tell you, PPI. That's the reason why. No, it's not true. If you do take a look at the dollar index, U.S. dollar index is down today. So if PPI was the hawkish for the dollar, we were expecting this maybe a rate hike and it was crashing the markets, then you'd have seen a big rally out of the DXY today. Didn't see it. You're actually seeing things sell off a little bit. So when I look at this, and when I sit there and I say, okay, what the heck's going on? I talked Monday a lot about the underpinnings of these markets. Something was there that we couldn't really put our finger on. Talked a lot about it being the Epstein files. There's been stuff that's coming out day by day on that. War typically has that kind of impact as well. So when you look at this stuff and you say, PPI was up, the dollar should have went way up, and that's what's crashing stocks. Well, the dollar didn't move, but I'll tell you what did. The VIX, the volatility index, that's up big today, up almost 11.25%. So what's happening here? There's fear. They're beating the war drums, and everybody's scared. So that is where we are. Now, I'm going to show you the odds and sort of back up my case here, but it's a pretty strong case, and it feels like it's going to happen. Also, USOIL is up almost 2%. Really no reason for that other than a war. It's one of those where you just have your fingers crossed and you hope you're wrong. But everybody in the media right now is talking. The scuttlebutt's there. The odds are changing, and there's a lot going on. So we've got big volatility for a No Donation Friday. I'm not even going to talk about the concepts. I thought it was going to be relatively quiet. Final trading day of February. I'm going to go back through and look at a few of those numbers. I got a couple requests to boost the font up on my monthly performance, and I went ahead and did that. So we'll walk through that here in just a little bit. And if you have any questions, I'm more than happy to answer. So good to see everybody back in the room. Let me see here. No Donation Friday, Team Arena. Good to see you. We're going to have to skip it. We're going to have to skip it. I mean, the markets are crashing. What can we do? They forced our hand. Let me see Joshua. Hello, Josh. How are you doing? Let me see Jason. Yo. What's happening, Jay? I'm confident you're doing well. I'm confident everybody's doing well. Babjeez, no wonder gold spiked up out of nowhere. That's exactly what happened. Let me see forex psychiatrist. Gold's at 52.50. Yep. And let me see, O4C, Araj, good to see you, Araj. Over in the How to Trade community, really a lot of new traders over there in the YouTube land. I always love to see the new faces, but sometimes you get those, everybody that weighs in from the How to Trade every day. It's always good to see you guys showing up. I went back and looked at streams from a couple years ago. A lot of the same names were in the stream, so it's always, that's very flattering that you went to that many of these live streams. If you have any questions at all, be sure to ask. I'll be sure that I ask. Let me see. Tuku, good to see you, Tuku. Welcome. Andrea Garwal, happy Friday. Good to see you, Andrea. Welcome. Ralph H., always a pleasure. Ralph, Lita, Steve Francis. Hi, Shane, with a period. Love it. I love it. Keep it short and sweet. Fantastic. All right, everybody, there's a lot. There's absolutely a lot going on. Where do you begin at? Let's talk about a trade idea that we put out earlier this week, and then we'll get into some of the markets that we're talking about. You can see right here, key support level for the Great Britain pound, Japanese yen. It's a trade update that I put out, a trade that we put out a few days ago, and you can see right here, what do you have? You've got 208.31. That's robust downside support. Now, the reason why I bring this up is February's lows in. Today's the last trading day of February. You're going to have an opportunity more than likely to hit that support zone probably early next week. Early next week, I'm watching this one closely. So I want this one sort of on my mind as we roll into the weekend break. I have to issue an absolute warning to all of you. And it's a stark one. Don't carry positions home over this weekend. Don't do it. Now, gold and silver especially, I know the vast majority of everybody in here is trading gold and silver. Don't take those home over the weekend because you can get hurt really bad. You can get hurt really badly, and I think it's important that you preserve your capital. It's much better to go home flat on a day like today where we could get some major geopolitical activity over the weekend than it is to go home and just hope that your positions work. You don't want that. You really don't want that. There is a couple other ones that we need to talk about here. This natural gas idea, definitely interesting. I mean, I'm looking at natural gas. We're getting a little bit of a bump today, but we have to be realistic about where this thing's heading. We're going to check out. We're going to check out the low. We're going to check out 2025's low. I won't say it's guaranteed, but I mean this month you're off 45%, 45.74%. Not really too surprising when we're talking about natural gas. You're up 43% in January and you're down 45. I mean, that's incredible volatility. This low down here should draw some bids. So we do have a trade idea out that went out earlier this week for natural gas, but I'm definitely watching that spike low right in there. I think that's a fantastic area. You see right there November 2024, December, and then right there January, February, March, April, and then you get through the summer months. Couple of hammers, couple of inverted hammers right there. Fantastic. Then you got some dojis, and then maybe you get the bounce, maybe you don't. Pretty sure we get a bounce off of those lows, but we have to be ready for potentially going lower. It really depends. And, what does, a U.S. strike on Iran look like? What does that do to the energy markets? We're going to talk about it. It drives them absolutely crazy, and it's not because Iran is shipping that much natural gas. It's not really because of any of that. It's all about the Strait of Hormuz, and Iran can close that. If they want to start blowing up tankers in the Strait, or if they want to sink their own tankers in the Strait of Hormuz, that's the choke point for your Persian Gulf oil, Persian Gulf natural gas. They can shut it down. That will be probably the first move if this escalates. If you do see a war, the United States hits hard and hits hard. That'll be probably the first move out of Iran is to close the Strait. That will spike global crude. That will spike natural gas. Perfect world. You would love to get your trade before anything like that happens. But that's the first move from Iran. Really, the retaliation will come in two forms. We'll talk about it here in a second. But it will be closing the Strait of Hormuz, and it will be launching a barrage of missiles at Israel and potentially at other countries all around the Middle East. There's people on high alert really everywhere in the region. We'll go ahead and look at some news stories here that lead us to believe that this strike's coming. But we can always be wrong. We can always be wrong, and in this instance, maybe cooler heads prevail and we get a late-day negotiation. Really hard to say. Really hard to say. At the 25th hour, does somebody negotiate? Possible. USOIL, what do you got there? You got a big January. I wasn't really ready for that. I sort of thought I really liked the bearish end of this market. But if you look at what we've been calling for a long time now, those lows down there are about 55. Sort of got tested right there, the low, 54.98, and then the big bounce. But since then, since we got that test of that zone, we just have sort of been bullish, and it's because of the war fears. It's 100% because of that. We saw a huge and an absolutely huge build in weekly supply out of the United States, 16 million barrels. Now what do you have? We're back on the bull. That should have been a bearish market driver for WTI. The bottom line is this. You price in fear, you price in war into this market, and it's sort of the way that crude oil works. I mean, rightfully so. When these fears step up, you get the big daily range. You get you get the big monthly range, 14%, and then you get another percent on top of that. Interesting market right now. Now, as far as Fibonacci's go, we could do a lot of different things with USOIL. For me, I would be definitely. I didn't trade it today. I didn't trade it today because, we've already sort of wrapped our trading for this month, and I'm ready to turn the page to March. But this right here. Very, very tight. And then you had that big, crazy candle yesterday. Why? US-Iran was negotiating. Why did you have this right here? This bullish break is because energy traders believe they're going to get a shot at the top side of this market. Late day trade. Could you place a late day trade today? You could. Spike low there, spike high. You've got support down there at 65.55. Pretty good one. And believe me, it may seem like you won't get a chance at that. Well, we're trading 66.79, Shane. You only got about another hour, 20 minutes. 65.55. It's doable. It's doable. I've watched crude oil drop $1 in just a few minutes. It's doable, but it depends on the news. I would really like to get a shot at that later today. That would be absolutely fantastic. Maybe to open next week, a pullback right in that zone. That would be good too. 65.55, not bad. Now, let's go to the intraday price action and show you exactly what we're talking about here. What's happened? Those were your war fears. Started beating the drums right there on the London Open. London Open. Tea and crumpets, I guess. What a rally. Pullback. What's the pullback? There's your U.S. traditional NYMEX pit open for WTI crude right there, about 9 a.m. Eastern, 7 a.m. my time, and now we're coming off. Now what? Nobody knows. On an intraday basis, I would really hesitate towards trading this with any sort of conviction. If you wanted to take a true smart money concept trade or something that you may be interested in doing with regards to liquidity sweeps and fair value gaps or whatever you may be trading, this top right here is a little bit suspect, 67.83. If you wanted to get maybe a sell up there, you might be able to, but you're about $1 off. My guess is the market's going to settle somewhere in this zone, probably right around 67. If it doesn't, though, I mean, this break right here in the last 30 minutes, look at that low, 66.12. If you do get a chance here, that's great. That's beautiful downside support. Really couldn't draw it up any better. It would really take something for the market to trade and close beneath that level today. And it might end up just being a great scalp from right above 65.50. It's interesting what's happening here. It's definite that there's some angst in the market, and we've got to be aware of these market drivers at all times. Absolutely at all times. Let me see, Babjee's word is the U.S. is using AI from Anthropic to plan the strike. God. AI planning military, huh? I saw a piece, I think it was from last week. I just actually saw a clip of it. But it was from 60 Minutes, and they had a programmer on, and he said that the entire world was going to be unemployed in the next 12 months because of AI. And I said, well, so be it. We'll put our feet up, right, and let AI do the work. That's fascinating. Word is the U.S. is using AI from Anthropic to plan the strike. God, who even knows? Who even knows? A couple other markets that we want to look at here. I do want to talk a bit about the 9 EMA, though we had some great setups yesterday. I dropped this link in the live chat just a few minutes ago, but if you're interested in the 9 EMA trading strategy brought to you by Switch, just go ahead and click the link. I put it in there, and you can give that a click, enter your email address, get the strategy pack, and that'll get you up and running with the 9 EMA. 9 EMA is a very basic strategy. It's one that we use a lot. We trade it live a lot on these live streams. Go ahead and get the pack, and it'll show you exactly what we're looking at here. But some interesting trades. Yesterday was something, wasn't it? There was your silver trade. We executed that one live, and it turned out to be an absolute banger. So right now, 30-minute chart on silver. We're sort of waiting. We're in overbought territory here. We're waiting for that bearish close beneath the 9 EMA, and then we can go ahead and send them short. Maybe a decent play. However, I would not be doing anything with metals that requires you to hold a position through the close. Don't do it. In this environment, yeah, it's true. You might get lucky and make a lot of cash, but there's also really, really strong odds that if you went home short silver, I mean, this thing could gap up 10%. And if you're taking a derivatives trade, that's the kiss of death. That's all of your money and then some. Don't do it. Don't do it. Most brokers right now have upped the leverage, they've reduced the leverage and they've upped the margin requirements. They probably wouldn't even let you do that. But if it sneaks through the cracks and you're like, oh, well, I'm going to go ahead and take this silver position home, don't do it. If you want to intraday trade it, great. Take this down to a shorter time frame. What do we got here? 15-minute chart. We're still sort of in setup land. If we get a nice close beneath the 9 EMA, it's not a bad trade. How about a 5-minute chart? Well, right there, you're working a 5-minute sell that developed, a couple hours ago. But right in this area, if you wanted to trade it, if you had to trade it right now, okay, 5-minute sell. You can go ahead and put it down. Your entry is a little bit better than initially. Stop loss is right up above that swing high. Profit target's going to be right down in here, somewhere right down in this area, right down in that, I guess you'd say rally, right there in the base, Interesting stuff if you had to make a trade. Personally, I think that these are really difficult to trade right now. U.S. Tech 15 minutes, you can see right there coming off of the bottom. We had a nice buy signal right in that zone, and it actually rallied pretty well for you, and then the market is stopping and reversing. People are scared. It's just not the time. It's just not the time to be holding longs. It just isn't. I mean, there's way too much that's going to happen after the markets close. Way too much. So you've got to be very, very careful with what you do, and you have to use your mind. You have to use your head. That's why we call this No Donation Friday, is because we don't want to just give money away before the weekend break. If you want to take these trades, you can take them. Just manage them aggressively. Like this trade right here, this bid, you had a bid right in here somewhere. You got a pretty good runner. Pretty good price action before it actually reversed against you. Maybe that's one where you're looking to take a smaller profit. Maybe you're managing your risk extra tight on a Friday. I can tell you exactly how I manage Fridays. We can cover that in a second, I guess. But as far as this dynamic goes, be very careful. I know I'm saying that a lot, but you've got to be very careful. US 30 right here. You've got a big-time sell-off today. You can see we've broke beneath that area right there, and we may actually extend this daily chart out to potentially an overbought or oversold area. Now you can see that we only get back a couple hundred bars, I think, on our back tester here for this 9 EMA, which you can adjust in the code if you'd like. Just watch the videos. But something like this, interesting, right? We were in overbought territory the last time was just a long time ago. Look at all those days. What do you say about that? July, that was back in July. So been trending higher, and now we've started to break beneath that 9 EMA. We're still at sort of the 50-yard line of our pricing envelope, our 70-30. What do we have to have happen? You've got to come way down here and then maybe get a buyback. That'd be a great trade on a daily time frame. You just adjust your time frame. You go down on an intraday and you say, okay, what are we looking at here? There it was right there. Boom. You got washed out. That was a great example of a trade you could have managed tight. You're in, you're out. You take your loss. You stay out of the downtrend. That's the key. We don't want to fight trends if we can help it. So that one right there, you got stopped out on, that would have been a loser. 15-minute chart, same basic premise there. You got a little bit of a run on the US 30, and then it reversed against you. And you got into a little bit of trouble. And now the 5-minute, see if I can get it. So the 5-minute now is just compressed. Look at what's happening. Right there, about a value of 50, 48.81 on the RSI. That tells us a couple of things explicitly. It tells us the market has no rhyme or reason or direction on these short time frames. So even though stocks are very low, things are slowing way down, you're either going to get the late day buyback or you're going to get a continuation of the downtrend. Wouldn't shock me if they wipe lows if war's in the cards. Wouldn't shock me. Would not shock me at all. That's for sure. Let me see. Bible Tales for Kids. Good to see you, Bobby Bob. Good to see you, Bobby. Welcome. No Donation Friday. Next, we will have having high volatility according to fundamentals. Yeah, I mean, the volatility's there. The volatility's there today. It's really a big deal. And this Iran stuff is going to bring a lot more action to the market. We haven't really talked much about PPI. I'm going to go ahead and run through our fundamentals of the day. It didn't even really make my radar today. The PPI report was one of those that wasn't scheduled, I don't believe. I didn't see it on any economic calendar. They just decided to drop it. But I believe they announced it yesterday after we were off. I missed it completely. I said, they released PPI this morning. Why? So there's no rhyme or reason to these releases. They're just releasing numbers. Next week, we have NFP Friday, tentatively. We'll have that booked and ready to go. And if they do release the figures, then we'll go for it. If not, then we won't. It's just the way that it is. This is life right now in the markets. Let me see, Babjeez. I got my 9 ticks from the US 100. Fantastic. All right, guys, let's go ahead and look at week 9's fundamentals. You can see today I had no donation Friday. We were going to talk about psychology and maybe how to hold on to some of your money, and now we're just talking levels and trade ideas. That's for sure. So I'm kind of had to change in mid-speed. Let's see, news of the day, PPI. So this is the hot inflation. This is the inflation fears that everybody's worried about. This is the first print out of this year. So this is January's PPI. You can see month over month, it came in at 0.5%. Core PPI came in at 0.8%. Core PPI year over year is the one that's really hurting, 3.6%. PPI, 2.9% year over year. And then you've got all the food, energy, transports, all the different ways they decide to cut the number up. The bottom line here is that our PPIs are up. They all beat expectations on the top side. And when I say beat, I mean they beat them. It means prices are higher than they thought. So technically it wouldn't be a beat. It would be a disappointment. But just remember that those numbers were higher than we expected. They were higher than the previous release. And this yearly number right here for core, you can really see that core PPI is the one everybody's hanging their hat on because energy prices are down here in the United States. So they're saying, well, let's strip out the energy and see what we've got just regular and core PPIs really painting an ugly case for inflation. That's not good. That's not a good set of numbers at all. We'll learn more next week with NFP, but that right there, pretty much, in my view, I'm really, you can't say certain. You know, I'm not going to say, okay, I'm 100% certain on this, but it feels like you're not going to get your first rate cut until June, and I think that's when you get it. I don't think you're going to get one with Jay Powell leaving here in 2 more meetings. It's not going to happen. What does that mean? Well, I think it's already priced in, baked into the cake. So I'm not really sure that these numbers mean anything other than if they go up very, very high in the next 2 months, we'll start talking about a rate hike. And that will really depress the markets. But today, this is not the market driver. Everybody's saying it is. It's not. And if it was, the dollar would be way up. It is not. It's also just right around scratch. It's off a little bit. So we wouldn't be seeing that. War is the name of the game today. You see right there, producer price index in the United States increased to 152.17 in January, averaged 120 with an all-time high of 152.17 in January. So we are trading at all-time highs here for your PPI numbers. This isn't good. You can see last year, February, March, things were starting to change here in April. Bit of a downtick. We had a couple of down months in a row, and since then we had one pullback in August, and now it's just off to the races again. I'm one of those people that, I probably wouldn't get a job as an investment firm or as an investment advisor because I would tell the people the truth. And if you guys want to know the truth about inflation, is it's not coming down. We flooded the market with money after COVID, unlimited quantitative easing. It created just an absolute huge liquidity bubble. You see the price of houses has never come back to where it was. The price, like things like crypto, we talk about crypto a lot, right? You could argue that quantitative easing from the COVID era really did boost something like a Bitcoin. It's off today. Take a look at the monthlies. It's just very basic. I mean, you can see we've got I'll give you the trade idea here in a second, but let's go back in time here on the monthlies. Where were we? It's 2017, 2018. Where are we right here? 2019, flat, and then March of 2020. What was the low? That's when COVID broke out. What was the low? 3,800. And since then, once that liquidity hit the market, zang. And then all of a sudden, you had a highly speculative asset that was getting just a tremendous amount of money pumped into it. Why was it? Because there was a lot of money in the system. People like me and you. People, I laughed at the time, as did everybody, but folks were getting stimulus checks in the mail from the government, a couple grand. Some families were getting 10, 15,000 from the government, right? And some of them bought Bitcoin. Some of them said, well, Bitcoin's about $3,000. I'm going to go ahead and buy a couple of Bitcoin. Well, it turned out to be the greatest move of all time. You bought 2 Bitcoin with your government stimulus check. Then 5 years later, you walk away with $250,000 if you sold up at the top. That's a pretty good move. Pretty good move, right? At the time, they were being laughed at. Well, what I'm saying is there was so much of that money flying around that a lot of it went into the crypto sphere. And not just from individuals like me and you, but also from companies, small companies, startups. How many crypto startups have hit the wires in the last 5 years? Thousands, tens of thousands. So the money really did shift from government coffers and central bank coffers into crypto coffers. Well, look at what's happening now. You're seeing a correction, and it's a deep correction. I got in an argument the other day on X with somebody who gets millions of followers and is an influencer, but I told him what was up. I said, listen, he was predicting that Bitcoin was going to shoot through the roof this year because the situation was a lot like 2021 and 2020. And I said, not even close. The liquidity is not there, meaning where's all the money going to come from that's going to drive Bitcoin up from where it's at right now? It's going to help it double or triple by the end of the year. And this guy was calling for this thing to triple or quadruple by the end of the year. Now, I love the optimism, and there's nothing wrong with the long side, but let's be honest. It's going to take a hell of a lot of money to boost this market that much. So we fall back on our levels and we look to trade it. Right there, 58,000, I think it's a pretty darn good level. We've had a 58,000 buy trade idea out there for a long time. You can see that this year's low, 59,930. So if we come off about another 2,000, which I think can happen over the weekend with a strike, We could definitely be in play at 58, but it's just a trade. You're only looking for about $4,000, $5,000 on that trade, something like that. If we do break beneath 57 and we cannot hold our water from there, if this does not work, then we go a lot lower, and that lot lower is 40,000, 39,000. It feels like we're going to go down there and test the waters at 50, and at 50, more than likely, you're going to wash out a bunch of people at 50 and sell off a little bit and then bounce and get reestablished. I'm fascinated to see what happens in Bitcoin. I'm still a bull. I just don't see forex by the end of the year. Not in this environment. Where's the money going to come from? We're not going to start cutting interest rates here for another, 4 months? Where the hell's the money going to come from? So that's what I would say to that. But I do like my levels. I like 58. I think 58 is going to be pretty good. That's for sure. Let's see. What do we got here? Let me see. Lebo, good to see you, Lebo. Welcome. Let me see. Lebo gang, what sources of news do you use when you are looking for these cheap stocks and crypto to invest in with the potential for massive aggressive growth? What news do I look at? Most of the time, if you're looking for those big winners in stocks, you're going to be looking at pink sheet stocks, which are stocks that are sold outside of the exchange on the OTC markets. I don't do any of that. I had to do a lot of research on pink sheet stocks and OTC stocks when I was working as a financial writer, about a decade ago already. And the more I looked into the pink sheets and the OTC, the more I decided it just wasn't for me. Now, as a trader, it could be very good for you. I mean, because there are those penny stocks that explode in price. But it's funny because what we get into with our mindset is, okay, I'm going to buy. Hang on a second. I'm getting pinged every day now. In any case, the penny stocks, we fall into the same thing with the penny cryptos. We get in there and we say, yeah, well, what is it? Well, it only has to go up 3 or 4 cents, and that's a 400% return. Yeah, well, I did that dance with Shiba Inu, and we got into a pretty good trade there, but just because something isn't worth hardly anything doesn't mean that it ever will be worth something. So I always, with the OTC stocks, I say proceed with your own risk. You can look at the pink sheets. You can just do some Google searches, maybe run some AI searches to point you in the right direction, Lebo. I don't do that. And then as far as crypto goes, cheap crypto, I'm just looking at charts. I'm reading macroeconomic cycles and looking at charts for crypto. I'm not really too interested in the news of the blockchain because a lot of it is a fugazi. A lot of it's fake. A lot of it, I mean, I'm not sure that anybody really knows what the blockchain is and how it applies to this world. Now, it may become a big deal. AI may love the blockchain, and I'm sure that it does. But as for right now, I don't look at any news. I mean, if you want basic news outlets, just like CoinDesk, CoinMarketCap, that'll give you some stories on crypto. But I'm not really too into trading fundamentals. What I like to see is lack of regulation. That's what crypto is all about. Deregulate and then pump it. Then there you have it. Let me see. Tina Jean, good to see you, Tina. Welcome. Forgot my time. Nearly missed your stream. Oh, that's okay, Tina. We're on demand. You can pull up this stream anytime you like. Let's see. The broker mentioned to stock up some gold as America is going to escalate the situation with Iran. Well, maybe the broker was watching the first part of my stream. I don't know what is the price he should be getting for a quick scalping for this event. I can't advise you to do that, Tina. To buy, man, boy, if you guys buy and hold gold over the weekend thinking that you're going to show up and have it gap up if something happens, just remember, if nothing does happen or you see them shaking hands tomorrow afternoon and a deal's been reached, it's too risky. It's too risky. In no way. If you do something like that, you do it on your own. You don't do it with – I don't condone any of that. It's too risky. I told you the story not too long ago. A client from Switch Markets did that, went home short gold. Gold gapped up against them, and they were on the hook for $40,000. That's real. I mean, that's real life. You know, you can lose a fortune. And I'm going to show you my numbers here in a minute. Just a quick recap from last month, and they're humble. I'm not interested in losing $40,000 on anything. Lebo, is pump and dump really a scam? Oh, yeah. No, cryptos get pumped and dumped all the time. Penny stocks get pumped and dumped all the time. Yeah, it's a scam. And the problem with those things is you're not on the inside. I'm not on the inside. If you're not inside, you're outside. All right, let's go ahead and take a look at the gold market. We'll look at gold and silver, and then we'll go over a few numbers here. And then if there's anything else you guys want to look at, we covered a lot of the forex yesterday, so I'm not sure that we need to do that again. Interesting here, 30-minute chart, spot gold, XAU USD. Really sort of a simple market read right there, 5:30 a.m. my time, maybe 6. Typically, that's when you start seeing volume flood into the market, 8 a.m. Eastern. I believe that's the traditional COMEX gold pit open. Something like that. Very interesting, isn't it? There's your big break, okay? And then you just go flat. Pretty much flat. We went up, we peaked at 52, 58, and now we're right back around 38%. I mean, this for me on an intraday basis, as slow as this is, it looks like everybody is just sort of waiting on pins and needles for something to happen. And a lot of times when you have an active news cycle and the market flattens out, you could get a big sweep and a big move out of nowhere, and it could be bullish or bearish. I just don't know. I just really wouldn't be trading that intraday today. No way. As far as what could you do, maybe big picture next week, our fundamentals are relatively straightforward. You can see that we're potentially going to threaten maybe the top of this range. It's very possible. We're looking right now, our weekly highs are somewhere right up around 52.50. So if we do make a move up here, there will be sellers up here, at least in the short run. If you do see war break out, and it's a big strike, and maybe the United States takes some casualties, and maybe the Strait of Hormuz gets shut down, then you will see a big run. If none of that happens, then you're probably going to sell off down in here. And if you were long from here, man, that really hurts. So I'm still looking at this 3-day range as being in the end-all, be-all in gold. I mean, 29th, 30th, 2nd of February, that 3-day range we trade in for the entirety of February. The entirety of February, we traded it. So fascinating stuff there. Going into next week's trade, if we can get a top, it looks like we have a chance to have a top. It's just difficult for me. I mean, look at this formation just isn't good. It just isn't good. Technically, it's not what I'm looking to do here. So you probably would want to be bullish, tentatively bullish. Let's go down to a daily again. And what could we really be talking about here? It's just so tight. It's just so tight in there. You know, I don't advise that. It's too tight. It just isn't any good. Let's go ahead and back off to a weekly, but even that's going to be really problematic. I got to see more out of gold before I start trading it again. I like the way it's starting to stabilize. You can take a 2-week range. That's better than the dailies. Maybe 51. Maybe buying 5100s. That's probably about as good as I would do. I'm not interested in selling anything with this much geopolitical activity going. I'm not interested in that. As far as what could we be looking at in the next 72 hours for gold, God only knows. I mean, God only knows. We'll see. Let's go to silver. Silver, same basic idea. You see that the uptrend here today, up 5%, is a little more pronounced, and you're up around $93. I mean, this has been an epic rally. Take a look at your 30-minute chart. That right there is a 3% gain. I mean, that's just a massive gain. And then you pulled back, beautiful pullback, and then you made your next leg up, and now we're just sort of looking to close somewhere. So, do we want to have anything for early next week? Well, maybe. Daily. These technicals here are a little bit better than gold's. Looks like we've finally broken from 75. But for me, I mean, it's just a challenge to find anything that really works, meaning anything that we have confidence in. These two weekly candles really messed things up. They really did, because those ranges are so huge. What are you supposed to do with them? We already looked at the 920 crossovers for these. They're both on buys, and they're both working great. So it's too late to play one of those. What do you do here? We had some 9 EMA scalps maybe we could do. You're probably going to need to see a pullback, like a significant pullback, maybe down in here, maybe back to our 75 level to get us, long with a little bit of confidence. But we're starting to trend a little bit. We're starting to break towards the top side of this range. But as far as is there a trade right now? Just don't see it. I don't see it. Euphoric highs, 121. There was your 30% loss, 26% loss in a day. We covered that live. That was a bona fide market crash right there. And we've just sort of traded sideways. So if you wanted maybe to sell something, maybe you could look at the market through this fashion. You can see right there. I mean, there was your scalp right off of that swing low. Bang, bang. That's beautiful. Now you broke. 99.85 more than likely will be significant resistance for early next week. Somewhere right in there. It's not bad. It's not a bad idea. I mean, it can definitely, that trade right there for a light scalp, more than likely you're going to get a pullback from that zone just beneath 100. The big thing I would be careful of is getting caught short when this market has shown us day after day after day that it is just explosive. I mean, look at that right there, 5%. Even that one's a small one, 1.3 or 1.75, 7.78%, 4%, 4.25, off 1%, up 2.5%, off 1%, up 5%. It's explosive to the top side. You know, if you're flipping a coin right now, are you betting up or down each day? You're probably going to win more just betting ups every day. Fascinating stuff. It's a challenge to trade. I mean, with these formations and the way that this price action is developed in gold and silver, it's a real challenge. I want to see more before I can get excited about the levels and everything. But that right there, that 62%, probably a pretty good resistance zone. But that's a scalp. You're not taking shorts there. You're not going to take a short and hold that for a while. What I'm saying is you're not going to sell saying that's the top of this rally. But it is interesting. 100, big round number. It'll draw some participation. Let me see. Lebo, is there a difference between pump and dump and pulling the rug from underneath, or are they the same? They're pretty much the same. I mean, you could talk to some guys, and they'll tell you exactly what a rug pull is or a pump and dump, but it's the same thing. The rug pull is when everybody sells, all the insiders sell, and essentially that pump and dump would be where you would have somebody of notoriety or something of notoriety would introduce a product, and then they would get their institutional buddies behind it, pump it, public jumps on the back, pump it, and then those guys pull the rug. That's a pump and dump. It's supposed to be illegal. I don't know. We see them every day now, it seems like. So there's a lot of that going on. Let me see. Babgees, do you use the 21 EMA and the VWAP? No, I don't. Although I'm going to be doing some work with a VWAP calculator. So probably have a couple videos out whenever they get around to getting done and posted. But I'm not a big fan of the 21 EMA or the VWAP. I like the 13 EMA. The 13 EMA for me is the end-all, be-all. But the 9 and the 20, the 9 is definitely relevant. No question about it. As far as PPI goes, not really much else to say about it. Core wholesale prices rose 0.8% in January, much more than expected. Who cares? We know that. This is it right here. You've got Iran. U.S. evacuates Israel embassy staff as Trump's Iran decision looms. A spokesperson for Iran's military said any unwise American action will lead to widespread fire in the region, and that'll just be all the missiles. They have thousands and thousands of missiles and drones, and that'll be the retaliation. That'll be that in the Strait of Hormuz. Watch that. Tensions between the son of Iran's last Shah and Kurdish dissidents show cracks in opposition. Iran says U.S. must drop excessive demands in nuclear negotiations. I mean, it just goes on and on and on and on and on. It looks to me that it's going to happen. J.D. Vance, no chance U.S. will be drawn out war in the Middle East, and it's just not based in reality. I mean, they know if you're talking about changing regime, you're probably going to need ground troops, and that's been going into Iran. Anybody that's my age or remembers what Iraq was, that was really unbelievable. Took forever, and it was. Talk to anybody that's ever gone there. I've had a lot of friends that went to Iraq and served, and this country is in no hurry. The people are in no hurry to go to war in Iran, and it just looks bad. This looks like a bad dream, really. We'll see what happens. U.S. strikes in Iran. Buy. Here's our poly market odds. February 27th today, 4%. Tomorrow, 19%. That's up big. March 1st, which is where a lot of people are saying that'll be Sunday night, 24%. Let's take a look at this 19% right here, February 28th. Let's see if there's a chart out. There's no charts. Yeah, there you go. So we were right up here at one point. You're off 29%. You can see that is incredibly volatile, but you can see that this right here is sort of like an options contract where as you get closer to expiry, sort of loses its value. So at one point we thought it was a foregone conclusion, and then we sort of came down here to 15, and then we got that nice pop right up in here, right around 30. Then we came down. It looked like it was over for most of the week, and then you got that dramatic spike right there. Unbelievable stuff. So that's for tomorrow. these are legitimate chances, and if you keep going through March, March 7th, March 9th, March 11th, March 12th, it looks like this thing's imminent. So you're definitely going to want to have one eye on the news, and I don't recommend going home long or short with anything at all. That's for sure. Let me see, Ralph H. Why do you like the 13 EMA over the others? That's what I was brought up on, Ralph, was 13 EMA. That's what I was taught to use, and that goes back to sort of the validity of 13 as a statistical measure. You can feel free to do sort of your own research on that. Just Google 13, the importance of 13. It wasn't just a lucky thing. The back testing for the 13 EMA originally back in the old days when they didn't have all this AI intelligence and all these different ways that you can back test strategies, they had something called, I don't want to get into this story because it's a long one, but essentially it was my uncle's and his research team that was working for Shell Oil at the time. They had access to something called the Cray supercomputer. Well, the Cray supercomputer, there was only a few supercomputers in the world, and now we have supercomputers in our pocket. That's the reality of it. They took a bunch of moving averages to the Cray supercomputer, and they fed a bunch of pricing data into it, and they wanted some tendencies on which ones were sort of valid with maybe predictive value. I use that term very lightly because nothing really can predict anything from my experience, but they were doing all sorts of things with predictive value, and what they wanted to find out was what was the EMA that was most not sensitive, but that showed the best correlation to price action. Meaning, what is the best sort of trend indicator? If price is above the 13 EMA, does it stay there longer than it does for, say, a 9 or a 20 or whatever? And so back then, and I'm talking about the 1980s, the markets are vastly different from then, but that's what they came up with. They said 13 is pretty good. 13 EMA is pretty good. And so for me, it's just comfort, Ralph. I've been looking at the 13 EMA since 2010. And so for me, when I'm looking at an EMA, I know pretty well what the 13 is going to do. Now, the 9 or the 20, they're all good. They're all good. The 9's a little bit shorter and the 20's a little bit longer. 13's just right. But, it really is all up to you. It's all up to you about what you use. It's just about having the discipline to do it. You're not going to find an EMA that typically is just garbage. They'll all work to a certain extent. It's just for me, I've been looking at the 13 EMA for so long and executed so many trades that the other day, that Euro FX futures were hitting the daily moving average. Loved it. And the thing about moving averages, especially when you're using it to do horizontal stuff, horizontal support and resistance levels, is they can sort of line up. So, let's look at our silver chart again. So this is our daily. So we gave you the 62% level on the top side. Take a look at this down here, though. Let's say this thing just sort of moves forward right where we're at for the next couple of days. Let's say we rally a little bit. What's going to happen here? Your 13 EMA and your Bollinger midpoint are going to go right up to that 38% level, right around 86. So if the price goes up here and then looks to pull back, theoretically, we are going to have an area of, commonality is what I call it. And that's where you're going to have, 2 or 3 indicators right there in the same zone. And then I start smiling and I say, well, we've got a pretty good support zone on our hands. That's what I use them for. Working on some stuff, though. Working on some stuff with AI and doing a lot of coding lately. And I've always wondered, I've had so many questions about how this system fits together. And I don't like doing back testing because it can really throw you off track. Gives you a false sense of security and you fall into all the data backfitting traps and all that stuff. But I want to see some tendencies. I'm interested. All right, speaking of tendencies, back by popular demand, I got a few requests to go back over the performance metrics from February. I don't know if we're going to be doing this every month. I might show up next month and lose 50,000. I don't know. I got a pretty good idea that's not going to happen. But I wanted to show some real performance because when it boils down to it, you don't know something's possible unless you see it done. And that's where a lot of the demo trades come from and a lot of our NFP trading and all those things, the high impact scalps that we've done live and all that stuff. It's all designed to show you that, yes, it is possible to trade. Trading is possible. Now, the numbers I'm going to show you are the numbers I showed yesterday. I just adjusted the font a little bit. A couple of precursors here. It's not showing my commissions for some reason. Commissions are already sort of baked into the cake. So that I believe they came off my gross profit before those are reported at the end of every day. So Take that for what it's worth. This was done on a $3,000 account. I didn't even have a $5,000 account going. So a lot of people you can do the percentages in your head. You're not supposed to be able to do things like this consistently. Well, there's a lot of different ways to skin a cat. Now, this was all done tick scalping. We were taking anywhere between 4 to 8 ticks. I believe I let one run like 10 or 12 ticks in crude oil, but this was in and out. And this was in and out. And so we're going to go through exactly what the metrics were, what the metrics mean in essence, and see if we can maybe get a little bit of clarity to some of these numbers, and maybe some of the things that when you see your performance, maybe how you can evaluate your performance and say, am I getting the job done? Am I just making money being lucky, or am I getting the job done? There's a few ways that you can figure that out as well. All right, let's go ahead and do it. Let's see if I can move that little picture. 1 second here. That picture right there is in the way, so let's go ahead and put that over there. All right. Okay, so you've got all these different performance metrics over here. All these different ones. And it's, there we go. Net profit, gross loss, commission, profit factor, all of it. I'm going to show you a few that can help you in your trading. So, of course, what everybody wants to see, and everybody on YouTube, I watched some kid's video yesterday. He was trading at a 1-bar orb, I think, a 1-bar 5-minute orb, and he made $80,000 last month. And I said, great, good for you. Performance, what is it? Of course, we want a big net profit. But just remember that your net profit, it really isn't the most important metric on the board for you. It's not. Your gross profit, is that the most important? Not really. Your gross loss, that's very important. Clearly, if you're losing a lot, you're not making any money. So, of course, we want a healthy net profit. We want it as big as we possibly can get it. But put that on the back burner in your mind. Forget about the money for a minute and think about being a good trader and what that is. A good trader protects your money while giving yourself a chance to succeed, your best possible chance to succeed, maximizing your capital efficiency, which means you don't let your losses get away from you. You don't sit around patting your back after a couple of wins. So commissions, whatever, that's going to be different no matter what you're doing. Profit factor, don't care at all. Max drawdown. Yeah, that's a big one for me. $175 was our max drawdown. That's not bad. That means before we actually got our business together and started winning trades, we were only in the negative about 175. That's pretty good. Sharp ratio, don't care. Sortino ratio, don't care. Ulcer index, that's just something fancy they do that shows when you're deep in the hole and you're losing sleep likely before you make a comeback. Total fees. All right, Team Marina can see it. All right, fantastic. Total fees. All right, whatever. I don't focus on that. That's built into my commissions for futures. Probability. I don't know. I don't really care about that either. Start date. All right, first. That was the 1st of February. 27th. So that basically is the month. Total number of trades. This is big. Now, you'll notice I'm not going to focus much on the long or short side of it. I've always loved selling the market more than I've loved buying it. Always. I've always loved selling more than I loved buying because from my experience, the selling, we were out of there really fast. Now, I like getting in and out. 45 trades in a month. Is that a lot? Now, what did I trade? 2. We traded the Euro FX futures and we traded WTI crude. That's it. Percent profitable. 77.8%. So we were winning pretty much, 8 out of 10 times. Now, does that in itself mean anything? Not really. Because theoretically, I could take one tick, right? I could take one tick on a trade and say, oh, I won, and you're winning every trade and you're not making any money. So that's not necessarily that important either. Number of winning trades, 35. Number of losing trades, 9. Okay, 35 and 9. Not bad. You'll notice that we're pretty much the same. Number of even trades, a break-even trade. You'll see I don't do break-even. We either win or we lose. So we stopped out at even there. Average trade, that means every time we pushed the clicker, every time we pushed our mouse was $36. Not bad. Average winning trade, $58. It's not sexy. I'm not sitting around going, oh, we're going to go buy a truck tonight or we're going Michelin restaurants tonight. Not really. 58. That's your average winning trade. Your average losing trade, 48. Average losing trade is less than your winning trade. If you're going to focus on anything, it's those two numbers. If you get your winners bigger than your losers, and your percent profitable is that high, you're in pretty good shape. Ratio win to loss, I don't know. I don't really care. I'm not into ratio analysis that much. But that right there shows you 58 on a winner, 48 on a loser. Now, could this be better? Yeah. Right there on our long trades, we did very well there. 33. 64.60. Not great. Not great. Still, though, profitable. This right here, ideally, I would love to get this, somewhere up. I'm never going to be, hundreds and hundreds and hundreds. It's never going to be that unless we go big size. That's a different conversation. But for now, just trading one contract and two contracts, that's fine. I would love to get that average loser somewhere down around 35, something like that. That's really what shows up for you. All right. Max consecutive winners. I'm a sports guy. I was a baseball player before I was ever a trader. 15 winners in a row. I like that. Over here on short trades, we had 19 winners in a row. So that's not bad. Things were going pretty well there, right? Max consecutive losers, 4. Not good. When do you think the 4 were? Weren't on Monday, Tuesday, Wednesday. I'll show you that here in just a second. Largest winning trade, 140, 14 ticks, something like that. Largest losing trade, 125, 12 ticks, 13 ticks, something like that. Pretty good stuff. You'll see right there. Pretty solid metrics. We're cutting off the losers. That's big. Now down in here, interesting. Average trades per day, about 3, 2.72. Average time in the market, 3.75 minutes, almost 4 minutes. That's skewed. That number's skewed. If we sorted just for the crude oil trades, it would be a lot smaller than that. The euro trades have skewed those numbers because I'm in them longer. It just takes longer for the market to move. Profit per month shows you your profit per month. Max time to recover, 1.27 days. Longest flat period, 5 days. The 5 days, when do you think the 5 days would have been? Probably would have been over a Friday and a Monday, right? Somewhere in there. So probably a Thursday through a Tuesday. That would have been the 5. This down in here, nobody focuses on. And this right here is where, if you guys are in the prop, you've got to know what these things mean. Max adverse excursion. Max favorable excursion. ETD, I don't really look at ETDs. So max adverse excursion, what's that? That's how far the market's going against you on a given trade, right? That's the maximum it goes against you before it either goes back, before you either get stopped out or it goes back to break even or goes to your profit target. Max adverse excursion is what the prop people use against you in your drawdowns. That's how much it's going against your position. That's why they put that trailing drawdown on you. They're always watching your max adverse excursion. That's what they're watching. They know that if you get in the habit of that thing drawn against you $5,000 or $6,000 and then you're taking a profit out for 50 or 100, they know that eventually you're going to get hit and you're going to lose money. Very important. Now, your max adverse excursion here is about $51. It's not bad. Look at our average winner. Average winner is 58. That means the market's only going against me a max of 5 ticks. You can't argue with that. That means that we're not sitting around going, okay, the market's going against me $500 and then I'm going to come back and make $20. Very happy with that. Max favorable excursion, 58. What does that mean? Well, this is the part where I probably get yelled at by not prop firm people, but hedge fund people. They'd say, Shane, it's only going in your favor. Mass favorable excursion, that's when the market's going in your favor. You're only letting this thing go 56 ticks. And I go, yeah, we're tick scalping. We're not going to sit around and try to get those 50 and 60 tick moves. Now, I'm not telling you that this is the only way to trade. I'm just saying that is how the numbers have to work. You need to have a less max adverse excursion over time. Now, you can live with it. It can creep up on you, and you can live with it for a while, but eventually it'll get you. Eventually those will get you. If that's big, if you see a huge MAE, you see a big one, you know that this right here could be a function of getting lucky a few times and not taking huge losses. So that's all we're talking about, is being efficient and not getting destroyed in the market. So that's the numbers. I want to show you a couple other things, and then I'll answer some questions. Let's go right here to analysis. I was asked about a profit curve. You can see that we'll cover that here in just a second. But essentially, this is what you're looking at. Started here, went negative, of course. And then we just sort of kept going. Just sort of rode that thing north. I mean, if you're looking for a profitability curve, that's what you're looking at. That's for sure. So that's essentially, some of the breakdown of how you can start looking at maybe some of what you like to do in the market. Let's see. Let's do one more exercise here. I just got to make sure my account number is not up. Yeah, it is on that. I can't show you that. All right. I think this will work. There's a couple things we're going to show here. All right. I'll show you my instruments, and I'll show you exactly how the flow of a month can go. So these are the trades. You'll see right there. There's the trades, 1 through 45. You can see we started out trading the euros. It wasn't going well. We actually closed, took a loss, boom, got hit, boom, got hit. But look at these losses. Really want to stress this. Those losses aren't bad. Yeah, it sucks losing, but look, took a loss there. That's about 5 ticks. Took a loss there. That's about, 2 ticks? Took a loss. That's 4 in a row. We started off with 4 in a row. That was as bad as it got for us. And then take a look at what we did. We went to 175. All right. Then we came back sort of in the same session, hit a 62.5. That was WTI crude, wasn't it? No, that was a euro. Came back here, then went flat, and then came back and hit a crude oil trade at the end of the day and basically walked away from day one flat. Now, what do you notice there? Too many trades. I was getting off the board. I was taking small losses, just trying to get going. Too many trades. And then once we got this thing going for the rest of the month, it was legit. I mean, then we got into our WTI crude oil. You can see we were trading crude oil and trading it well. I mean, there, boom, you're looking at 120 there, 60 here, 140 there. Nice trade. And now we're starting to get that momentum I talk about a lot. And now we're starting to roll. Now we're feeling it a little bit. Probably we could talk about leverage some other time, but this is, we're rolling. And we're talking about going days where we're rolling. Days. It's not every day. You don't sweat every day. All right, so now you're talking about this right here. A couple of short losses. Loss there. Wasn't real happy with that. What was it? It was on the euro. Okay, 2 lots on the euro. 25. Took another loss there. What was it? The euro. Then we just got hot again until you finally got to where you wanted to be at the end of the month. Is it perfect? Is it great? No, but it's textbook of how you keep your profits, you keep your losses small. You live to fight another day and let your edge work. So, you do things like that and you go, well, what does that really mean? It means you're being efficient. And that's really what we teach here every day, or what I try to show folks how to do in the market every day, is just to be efficient. Okay, let me see here. A couple of comments, then we'll go ahead and sign. Obviously, most of the how to trade communities left, but that's all right. They've seen this stuff before in our videos. Let's see. Much better. Profitability and consistency is much more important to me, because if I can make pennies, you bet. You make pennies, you can make dollars, Babjeez. That's my motto. Let me see. Tina Jing, 45 trades in a month. That sounds like a lot. Well, next month we're going to factor gold in. We're probably going to figure gold into the equation once it mellows a little bit. And we'll probably be up around, for March, I'm guessing, probably 60 or 70 trades, something like that. So you are in and out pretty fast. Yeah, we're not waiting around. A lot of those, I didn't really show you in the trade log, but a lot of those trades, I mean, they're over in just under a minute, 30 seconds or a minute. That's for sure. Let me see, Lebo. I don't have a question. It's just a request. Can you please in the future cover AI trading? I've been curious. Yeah, I'm still learning about AI myself, but yeah, I'm more than happy to do it. Let me see. Tina, how much margin cost for those small ticks, please, Shane? I'm not really sure what you mean margin cost. My commissions, my all-in round turn commissions with futures, I'm running right about $5 a contract. So if I trade 2 lots of WTI round turn, that's going to cost me about $10 to execute those trades. Now, that's with the commission and the exchange fees and the clearing fees. And those seem to go up every year. So that's a good look at some money management stuff for today. As far as where the markets are, Iran is the big one. Be careful over the weekend. You don't want to get caught out in the cold. You don't want to get caught out in the cold for sure. All right, everybody, I'm going to go ahead and sign off. I want to thank you for joining me today. It was a fun stream. If you have any questions at all, be sure to reach out at howtotrade.com. I'll be sure to get back to you in short order. And also check out our YouTube channel, Switch Markets. There's more content on the way. We've just sort of been doing a lot of different projects. Right now, the markets are bleeding, running blood red right now. So we've got to be careful with what we do. Like I said, don't take anything home over the weekend unless you're a real adventurer. But this could really be one of those weekends where just an epic move on Monday's open. All right, everybody, I'm going to go ahead and sign off for right now. I want to thank you again for joining me this week. I'll have the new schedule up in the How to Trade and probably here in about another hour or so for next week. Until then, as always, trade the action well, and we'll talk soon. See ya.